All right, let's get to the discussion now. Let's take a look at what drove sentiment in the market and also some other major stories in the market. We're also going to be looking at the cement industry. Why the price is rising so fast? Joining us for this conversation now is Abigail Alabi, research analyst at Vetiva Funds Managers Limited. Great to have you on the show.
Thank you. Good evening. Thank you for having me.
So I guess because there was a winning week for the market, it's looking like investors are returning. At some point, most analysts and some investors felt like maybe it was time for big profit taking and a major correction for the NGX. Well, it looks like that has stopped at this moment. The investors are back.
Yes, I won't say investors are done taking profit, as investors are heavily hunting for attractive yields. And so, in this week, we saw that the equities markets gained in 4 out of 5 trading sessions. And we saw strong buying interest in stocks like Geregu and also in Boa Foods. And we also saw that the equities market gained about 3.79% week on week. So we expect this bullish sentiments to return again in the next week, as investors are still currently hunting for attractive yields. And we also expect investors to take position in highly fundamentally strong stocks, also to get attractive yields as well. So we do not expect bearish sentiments to continue next trading session or next week. We expect to experience bullish sentiments in the next trading session. That's on Monday.
Right. So, but at this point, we got that red hot inflation number for January. That's the first inflation data we're getting for 2024. It's a big one now. So it's practically 30%, at this point, if you approximate the number. Is this going to phase investors at all in this market?
It's a known fact that if high inflation can negatively impact or reduce real returns on investment. So investors should be looking into assets that would outpace inflation or that would give them real returns once inflation is accounted for in their investments. And one of these investment outlets is the equities market. And also, while the fluctuation in the currency and also inflation would erode returns, for long-term investors should be looking at investing in stocks or investing in companies that really have strong growth prospects and can even weather the short-term or can weather these current challenges, and also in the long-term deliver value to investors. So, there are lots of opportunities in investment in the capital market for investors who are looking to beat inflation, also deliver strong or deliver long-term value for investors, basically. So the equities market has an abundance of stocks across all sectors that can deliver strong value to investors and also beat inflation too.
All right. Also, seeing new lows with the Naira, at this point at the official window and also at the parallel market. Talk to me. Is it possible, with the way 2024 is starting off, looking at the inflation numbers and looking at the value of the Naira against the dollar, is it possible that investors will be able to beat, inflation, currency devaluation in 2024 with the way it's looking?
We saw what happened last year. We saw that most investors beat inflation or even beat inflation last year. And we've seen bearish sentiments dominate the market since the beginning of this year. And I think that was some continue. Like I said, investors are severely or heavily hunting for stocks that will deliver returns. So we are seeing lots of domestic investors really go into the domestic market, and that has been driving up volumes, and that's also been driving up prices as well. So most likely see a huge influx of investors into the domestic market, and that will drive investors. That will also drive yields as well. And most investors are not just taking it or not just investing in penny stocks, they're investing in fundamentally strong stocks that have really strong prospects and stocks that can deliver long-term value. So over the long term, we expect that, or throughout this year, we expect that most stocks or some stocks on the exchange will deliver or will outpace inflation for investors, most long-term investors, most basically.
Because with the way, with the current weakness we're seeing with the Naira, it almost seems like investors might not be able to beat both heavyweights at this point. It looks like it'll be easier to actually maybe outpace inflation, but it seems currency devaluation is another, kettle of fish. Do you think investors can beat currency devaluation?
Yes, and that's a huge problem as well. Currency devaluation I mean, the federal government or the CBN or most bodies that are involved are trying to at least rein in this high or rein in the pressure on the exchange rate. So I believe that given all the efforts or all the strategies from the CBN and also from the federal government, we expect that some of these strategies or some of these things will yield positive results, and in the long term ease the pressure on the exchange. And we also see some investors. We're also seeing high yields in the fixed income market as well. So we are seeing investors heavily hunting for use across both sector, across both spaces. So I mean, if the equities market is also doing, we're also seeing increased yield in the fixed income market as well. So I think the federal government is trying to hike yields in the fixed income market to also appeal to investors, or to also appeal to investors of foreign inflows as well. So I mean, we expect most of these strategies to yield positive by the end of the year, give all things working, all things being equal.
Yeah, and what would you say would be the indicator that would show that investors are steadily moving away from the equities market into the fixed income market? What should we be looking at?
So may probably reduced volumes. I mean, since the beginning of the year, we have seen increased volumes in the equities market, and we saw that happen in the last trading session as well. So one key indicator for a shift or a transition to the fixed income market would be volumes. So if you are seeing lots of profit taking as well in the equities market, it's most likely an indicator that investors are switching to the fixed income market. If you're also seeing lower volumes than what we used to see before at the beginning of the year, that's also an indicator that investors are switching to the higher yields or higher rates in the fixed income market.
All right, just to get a quick outlook now, what are you seeing for the equities market next week? At this point, do you still see the bullish sentiment we saw this week? Do you see that carrying in to next week? And what stocks or sector do you see shining next week?
So like I said, we still expect bullish sentiments to take over in the next week. Like I said earlier, investors are severely hunting for investor or returns or stocks that would investment outlets that would beat inflation. So I mean, in the previous week or in this last week, we saw that Geregu and Barfoods really went up in this last trading session. So we expect these bullish sentiments to filter into next week. Pending the anticipated yield in the fixed income market, will most likely see investors still hold their position in the equities market.
All right, let's look at another burning issue now. Price of cement. We've seen almost a 100% jump, when you compare to last year, and definitely everything seems to be going up at this point. Looking at goods. Talk to me about cement prices. What's driving the prices so high? Is it just good old inflation?
So I mean, it's no news that cement prices have been increasing significantly over the past few months, and these are the key factors that have been driving the rising or the price of cement. Number one is input costs. So several input costs for cement producers have increased significantly, especially energy cost. And again, some of these producers use coal, which is primarily imported, and also fluctuates with the global market, or the price of coal fluctuates with the global market. And so given the rise in geopolitical tensions, we have seen this fluctuation in the price of coal, and also the weakness in the Naira also affect the price of coal. And also we've seen that since Naira has been weakening over the last few months, that has impacted the cost of importation of coal. And gas as well, another key energy source for cement producers, is also linked to the foreign exchange, also FX linked. And given this depreciation in currency as well, has also impacted the prices of gas and also cost of production. Other cost inputs like raw materials, that's for raw materials, we have something like gypsum, and also for their spare parts and equipment, they are all also imported. And since they are much more vulnerable to FX fluctuations, we have seen an increase in those prices. And also distribution costs for cement producers has also been increasing. I mean, in their last quarter results, their last year results, we saw a broad-based increase in haulage costs across the industry, and that caused operating expenses to increase for all cement producers. So as a result, in order to maintain profitability and also to preserve their margins, we have seen cement producers pass on this increased cost in form of prices to consumers. So that's one of the key reasons that we have seen, or one of the drivers, or those are the drivers we have seen of higher cement prices right now in the economy.
Yeah, because we're seeing some crazy prices there from 7,000. We're seeing 9,500. So Definitely, this will have a huge impact, on the real estate industry. But we're going to take a quick break now. I'm still going to have Abigail Alabi. She's going to continue to give us insight on this cement market right after this break. Don't go anywhere. Just stay with us. Welcome back. Well, continue the conversation there, seeing how high cement prices have jumped so far this year. I still have Abigail Alabi, research analyst at Vetiva Fund Managers Limited, bringing us up to speed on what's driving prices and what to expect going forward. Thank you for staying on.
Thank you for having me.
All right, so we see the Nigerian government there summoning Dangote, Bua, and Lafarge companies over escalating prices. Do you see this yielding, anything? Do you see prices coming down, after the giants actually answer the government?
So one key thing is, unless costs is being addressed, we most likely not see cement prices go lower. Because, cost is one major factor that has caused an increase in the prices of cement. Cement providers are really, really trying to protect their margin, also maintain profitability. So until cost is addressed, which they are currently doing now, we'll most likely see elevation in cement prices continuously.
All right, let's look back, at the cement industry for sub-Saharan Africa. Let's look at 2023. I know you guys did a report on that. Give me some insights to what you found in the sub-Saharan African region for that market.
Okay, so currently in Kenya and also in Ghana, South Africa as well, majorly South Africa. South Africa has had a really, really tough 2023. One of the major factors that caused the slowdown in construction activity in South Africa is load shedding. Last year was really the worst that they've had in the last few years. Load shedding has started since around 2014 in South Africa, and that has impacted the construction activities that they've had. And last year was really the worst they've had, and that also slowed down construction activities. But the government of South Africa is still very, very committed to increasing infrastructure development and also trying to ease the impact of this load shedding on the sector. And for Ghana as well, Ghana had a good first half of the year in the economy. We had increased infrastructure development in Ghana. But towards the second half of the year, we saw increased costs that affect the Ghanaian economy. And for Kenya as well, Kenya was expressing a double whammy, or experiencing a double-edged sword, being that they had currency depreciation and they also increased the export levy on the importation of clinkers. So both factors combined severely impacted the cost of production for cement producers in Kenya. And that also caused a slowdown in the construction activity in Kenya as well. So, Kenya is currently experiencing double problems right now in the economy. But like I said, most countries in the sub-Saharan Africa is still very, very committed to increasing infrastructure development as it's expected to drive economic growth and also development in that area. So we are still being watchful of what is going to happen in this year if the if government's ambitious goals on infrastructure development would continue, or still, if we see the government implement this in Sub-Saharan Africa. We're still very cautious about that. We're still looking onto the Sub-Saharan Africa to see if that would happen.
Yeah, and when you look at the cost of houses, homes in 2023, we've seen big jumps, due to inflation and currency devaluation at this time. But with what we're seeing with cement in the early part of 2024, what are you seeing coming for the real estate sector in 2024?
So for the real estate sector, higher cement prices will definitely increase the construction cost for the real estate sector, and this will lead to higher project costs and also potentially reduce profitability for real estate developers. And also this can also discourage new construction projects and also slow down real estate activities and also affecting the supply of housing in the market. And also this, like you said, it has affected house affordability. High cement prices has currently contributed to the overall cost of, or currently contributes to the overall cost of housing. And it has made it much more expensive for individuals or families to even afford houses, especially for low income or middle income households. So we've seen that the high cement prices has really impacted the price of housing and also will make costs or has dampened activities in the real estate market.
Yeah, definitely a tough time to be an import dependent country at this point. Hopefully, we're tracking the summons and see how what it yields, going forward, for that for cement prices in Nigeria. Thank you for coming on, Abigail Alabi, research analyst at Vetiva Funds Managers Limited. Thank you for spending your Saturday with me.
Thank you for having me.